Good morning and welcome. My name is Arindam Das, and I head the commercial advisory practice at Westwood Global Energy Group. The topic of our discussion this morning is the energy evolution, opportunities and challenges in the Middle East GCC region. To give you a quick view of the agenda, I'm going to start off with a quick introduction to Westwood and set the scene in terms of the energy evolution. This will be followed by a presentation on the topic by one of our panelists, Bart Cornelissen from Deloitte. We'll then do a quick round of introduction with the other panelists, followed by the panel discussion. And finally, we'd hope to portion the last 15 minutes or so towards an audience-driven Q&A, depending on how we get along with time. So for those of you who are not familiar with Westwood, we are a leading market intelligence firm that provides intelligence and commercial advisory services to the upstream energy industry. And to the very right, you have a list of all our different products, the subscription products that we provide to our clients. And at the very top, you can probably see is WinLogix, which is the first of our energy transition product. But we also have other products in the mix in terms of CCS, emissions, etc., that we hope to bring to the market in due course. So just to give you a quick snapshot of WinLogix, it's an offshore wind product that basically tells you about 1,400 projects globally. Also gives you a sense of all the different equipment types, the vessels, and the OEMs that are present in the market. The people who use this product ranges all the way from OEMs, developers, to also the financial and investor community. So if you'd like to know a little bit more about this product, I'd be happy to chat after the session today. So I thought, just to get everything started, to set the scene, why don't we have a quick look at some of the scenarios which start to talk about the energy evolution going over the next 3 decades. So I'm thinking of scenarios like BP net zero, IEA net zero. And what we understand right at the very beginning is that if the energy evolution and the transition is about to happen, then what we need to see is roughly about a 60 to 70% reduction in oil and gas demand by 2050 from where we are today, if those ambitions are to be met. So it's a pretty substantial drop in terms of the demand, right? But then how should the energy supply actually evolve if we are to meet this ambition? So on the right-hand side, what we have tried to show you is the actual profile of the consumptions in 2019 and 20 at the very left. So these are actual consumption profiles from BP. And you can see that oil and gas is basically 50% or more of the energy mix today. But as you start to look further into 2030, 40, and 50, what becomes really clear is that renewables, excluding hydro, actually start to get to about 60% of the energy supply mix by 2050. So it's quite a big shift in terms of the evolution as we start to think about it today. The other really interesting point is that when you look at 2030, so that's the first decade, the mix in terms of the oil and gas portion, or the proportion of oil and gas, is actually not too different from 2020. But I guess that is to be expected, because when you start thinking about the energy systems today and the amount of capital investment that is required to move away from a dependence, that's quite a lot. And I don't think anyone's expecting the transition to happen very quickly. But suffice it to say that the real challenge, I think we'll need to see it over the next 2 decades or so. And then as we start thinking about critical mass in terms of the transition and the evolution, it's really around the 2040 and 50 when we start to see that happen. So I'd just like you to kind of bear that in mind as we go through the discussion today, that what are we actually gearing up for over the next 3 decades. And on this slide, I just wanted to take a little bit of a time to delve a little bit into this region. And there's 3 different illustrations that I wanted to highlight. The first on the left is the CO2 emissions globally, but I wanted to zoom in specifically on the Middle East. So the Middle East is less than 10% of global CO2 emissions as of 2020. So it's a fairly small amount from that perspective. But then 3 countries really make up the bulk of those emissions, and that's Saudi Arabia, the UAE, and Iran, which collectively account for about 70% of those emissions. On the middle is data from IRENA, which shows what have the renewable capacity additions been over the last 5 years. So this excludes hydropower again. And at the very top, you can see that collectively, where we have got to in the Middle East is about 8 gigawatts of wind and solar over the last 5 years. And that's only a very small, tiny proportion of the global additions. But when you start to think about where the Middle East was in 2016, that capacity has actually quadrupled. So it's been a fair degree of movement in terms of that capacity additions, but we still have a long way to go if the region has to meet some of the ambitions and the pledges and the targets. And finally, on the right-hand side, I just wanted to give you a sense around digital transformation. It's been a buzzword for a long time, but certainly as we start to think about the evolution, it's being embraced not only by the likes of ADNOC and Saudi Aramco, but also in the UAE, in the broader sort of fourth industrial revolution perspective. This is a key strategic pillar of that movement. Why am I highlighting these 3 topics? So the first being emissions reduction, decarbonization, diversification of energy sources in the middle, and the third is around digital transformation. The reason behind that is because these 3 themes will ultimately underpin largely the discussion later today. So I just want you to bear that in mind as well as to what are we actually thinking about talking and delving into a little bit more in detail with the panelists today. So having said that, I'd now like to pass it over to Bart to introduce himself and go through his presentation.
So building upon what Arinder was already talking about, yes, the energy space is changing. We see a number of key trends. And I think we can talk about the speed, and that was discussed already with some of the scenarios that were shared. It's the transition is happening. The speed at which is, of course, to be debated and is dependent on a lot of different things. But what we do see is some common themes is a clear customer centricity. We see a clear drive for efficiency, that is energy efficiency, not only from a perspective of like doing things better, but really also when you think about all the new users actually leapfrogging some of the behaviors. We're talking about an abundance, and particularly in the electric space, and we're going to talk about that a bit because what we're seeing across all of these different trends is actually really significant investments by oil and gas companies. People are actually investing already in battery technology. People are investing in carbon capture and storage. People are investing in hydrogen. All of this is happening as we speak, but it's not done by everybody. And I think that's one of the key things here to take away is that all of the examples you see here, a lot of them are Western and particularly European IOCs. It's the region, and we'll come there in a little bit, is very different. And if you look at the US, is different also. And I want to stress that point because when we see that across each of these trends, not everybody is following at the same pace. Different companies are interpreting the energy transition a very different way. And that's important because what we're seeing at the moment, because of this disconnect, this misunderstanding, some of the problems you've seen in the UK is what has happened. Production of oil and gas has dropped a lot faster than it should have. And at the same point in time, renewables investments are not at the pace that we expect. And so we see kind of a supply deficit. We see a disconnect. Similarly, the questions around ESG, a lot of pressure on organizations to actually become more environmentally friendly. An example of that, the lawsuit that happened in the Netherlands against Shell. It's you can make your plans, but the judges and the other stakeholders might have a very different perspective on what you need to do. And similarly with the supplier imbalance and the question around decarbonization across the line is like, what are we doing actually as oil and gas companies to not only when we produce, but also how do we decarbonize our entire value chain? And one of the things we did a research around about 286 executives of different oil and gas companies around the world. And we actually, based on what their strategies are and their behaviors, we basically see there's 4 different categories. And we have what we would call the hydrocarbon stalwarts, the ones that are really keep on investing in oil and gas, that actually want to increase their market share. And you will find them predominantly here in the Middle East. This is the NOCs. They're all in that bucket. At the same point in time, the low carbon producers, the people that, yes, they're still investing in oil and gas, but they're very selective on where they do it. And it's really about optimizing that portfolio. But then you see on the far right, the people that invest in net zero. And that's, you would think that's about 5%, but important to understand, that's 5%, but they own about 30% of the reserves, because that's where all the IOCs are. Then you have the green followers, where you will see a lot of people like, yes, they want to invest in green, but they're going to wait until the technology is a bit more mature. So they're not going to do it right away. But you can see the bulk still sits very much on the left-hand side. So many organizations are still banking big time on oil and gas, where on the right-hand side, the investments in renewables, it's still small. It's, yes, we hear all the stories, but oil and gas will still very much be at their core. And it's important because when we looked at these 286 companies, not only did we ask them questions around their strategy and what they were doing, we also looked at their performance over the last 10 years. And it's interesting, like whatever the investment community tells you, there's actually a couple of interesting myths, and I'm happy to share the data in more detail behind it later. We'll not take you through all the financials. It's a bit boring, I think. But one first myth, oil has lost its luster. It actually hasn't. If you look at 2/3 of the companies that are focusing on oil and gas actually perform above the market. They're actually doing very well. I.e., yes, there's an energy transition, but you can make a lot of money still in oil. You don't have to divest all of it. The second thing is going green is profitable. That's actually not true. A lot of the organizations that invest heavily in green are not performing well. And there's many reasons for it. One is perhaps oil and gas companies are not the perfect owners of a green portfolio. They should leave it to other companies to do it that have more experience or skills or capabilities in that space. Or they've been investing in the wrong projects and so on. So green is not necessarily the way to go. The other one, and this is important when you look at portfolio management, is a lot of people say like, oh yeah, if you're agile, flexible, you sell, you buy, you figure out the right assets. Actually, companies that sell a lot and buy a lot underperform. I.e., it's better to be strategically focused and hold on to assets instead of continuously flipping them. And the last one is being big and vertically integrated is a good thing. That's actually not entirely true. There's actually a lot of value in being focused on parts of the value chain and not being the full value chain. The exception to that, though, are the NOCs, particularly in this region that have access to cheap resources and actually have a natural advantage over the IOCs. So you will see the ones that are big and integrated on the right. The IOCs are actually the ones that struggle the most. And why does this matter? Because this is a question around, if you think about oil and gas companies right now, what do you do with your portfolio? Where are you going to invest? Where are you going to divest? What are you going to do from a growth potential? Where are you going to invest in renewables or not? Are you going to get into the theme at the moment, here in the UAE at least, hydrogen? Are you going to invest in it? Yes or no? And these are questions really around, can you get the right projects, the right assets, and what is really the growth potential of them? This is basically asking the questions around, if you think about those 4 archetypes, if you think about those stalwarts, if you think about these predominantly oil, the green followers, the net zeros, what are they actually doing from a financial perspective? What are they focusing upon from a risk-return perspective, capital, free cash flows, the valuation? Where are they getting at? And what we're seeing is that there is very much a strategic difference. It's, if you think about the large NOCs in the region, they're focused on generating cash. It's not about investing in renewables. It's about generating as much cash as long as they can, for the governments here in this region to transform their countries. The investments, and that's interesting to see because you often get these comparisons made between why is Shell investing in renewables and why is ADNOC doing far less of that. The reason is Shell is a company in its own right. ADNOC, on the other hand, the decisions are made in the Executive Council. Investments in green happen in this region, but they're done by Mubadala, by Masdar. They're part of the same ecosystem. They just happen to be a different entity. It's important because this is really where, if you think about where this region sits, we sit at the low end of the cost curve. This is the region that, and it's a term you might hear regularly, last man standing. Here they're talking about, yes, we realize oil will end at some point, but in the meantime, there's still a lot of it needed. But we are probably going to be the region that produces the last barrels in the world. And why is that? One, it's on the right-hand side because we have the reserves. Two, we can produce at a very, very low price level. But I think what is important, and to end a bit of the discussion on that, is like, why are these archetypes? And I do realize that everything in the end is a hybrid. People do different things. They might be a bit of a stalwart with a bit of investments. But why is this important is, and I think that ties to the discussion we're going to have around topics like, for example, that Arindam was talking about, is digital, is depending on what kind of organization you are, you actually focus on different things. Is it operational excellence you need to focus upon? Is it on portfolio management? Is it actually on integrating the agility in your portfolio from renewables as well as the oil and gas business? And a lot of that drives decisions you need to make on where you want to invest. So what does that mean? To summarize, it's yes, there is going to be a lower carbon future, but it will be driven very much by a far more competitive market than we're used to. And you can see that pressure across the whole value chain. We really need to think about, for each of the organizations, what is your competitive edge? And that comes back to, like, what do you need to focus upon from an operations perspective, from a digital perspective? What are you going to do to make that competitive edge? And then lastly, how do you really want to differentiate yourself? And I think that comes back to the comment, like, you don't want to follow necessarily the path of everybody, but also you don't want to flip assets too often because you're actually going to destroy value. On that note, Arindam, I will thank you very much. We're going to start a panel discussion. So,
thank you, Bart. It was very insightful and some really pertinent considerations for the region. So we'll get started with the panel discussion. Just going to ask the panel to briefly introduce themselves before we get started, starting off with Angus.
Hi, morning, everyone. My name's Angus Roger, and I'm the General Manager of ProServe here in Abu Dhabi. I've been in the energy industry now for just about 8 years, and only moved out to Abu Dhabi at the beginning of 2020 last year. Very briefly, ProServe are a controls technology company with our origins just over 50 years ago in hydraulic physical control systems, mainly around oil and gas production. And today we are continuing our work with hydraulic and electrical control systems across the oil and gas space, but now moving in also strongly to the offshore wind and other renewable energy sectors in condition-based monitoring, controls and communications technology. So that's me, and that's ProServe.
I will skip this one.
Morning, everyone. My name is Paula Doyle. I'm Senior Vice President of Sales and Marketing at Cognite. I've spent my career and my education in industry and energy, and I'm really passionate about the topic we're going to talk about today. Cognite, we're a software company headquartered in Oslo, and we've built technology that allows large industrial operators to optimize their operations through the use of their data. So enabling them to develop AI and data-driven solutions and scale it across their fleet really quickly and optimally. We're working with some of the leading oil and gas companies in the world, including Saudi Aramco, BP, Total Energies, and Exxon, to do exactly this. So optimize operations, become data-driven at scale, and thus becoming more efficient and more sustainable.
Uwa Ideaveri, responsible for the oil and gas practice at Microsoft, was in the oil and gas industry for about 13 years before coming to Microsoft. Very excited about this topic. So digital transformation, sustainability, energy transition. These are just exciting topics. Looking forward to it.
Morning, my name is Robert Bruce. I'm the Regional Director for Petrofac Business Development. I'm leading the energy transition on behalf of the company for the Eastern Hemisphere. I've been in the region around 15 years and looking forward to hear what all my fellow panelists have to say.
Let's kick off probably with the most pertinent question around the region. So I just want to give you guys a little bit of a context of the region, right? So as Bart was saying, how important the oil and gas industry is to this region. So put it into context, the Middle East roughly produces about 30% of crude and 17% of global natural gas, give or take on average over the last 5 or 6 years, right? So it's a significant driver of national economies. But leading into COP26, which has just concluded, we also heard pledges from Saudi Arabia and Bahrain about net zero by 2060. Prior to that, the UAE pledged for net zero by 2050. And we also know that both the UAE and Saudi Arabia are actually going to invest over $150 billion each, as of now, over that period into renewables and transitioning into greener economies. So it's a real dichotomy, right? So you've got the reserves, you want to get the last barrel out, but you also want to transition into a greener economy. So against this backdrop, I think it'd be really worthwhile to start the conversation today by actually asking each of the panelists to talk about, in your view, what do you think is the single biggest opportunity, but also equally, what's the biggest challenge in the region in terms of the energy evolution? So perhaps, Paula, we can start off with you since you have the mic and then go around the table.
I'm lucky the mic ended in my hands. I think this is... So the opportunities and the challenges in the region here, they're massive, basically. And if you look at the opportunities in twofold, and I don't think it needs to be in conflict, because I think we all in the room here can agree on two things. First of all, the energy transition is happening. And second of all, it's going to be an energy mix. So regardless of what that mix actually is, oil and gas and renewables will be there and are starting to be there already. And then if you look at the region here, I think the major opportunities, if you divide it then and look at kind of the oil and gas side, of course, you have some of the lowest cost producers in the world. You also have Aramco, second most sustainable cost, or lowest carbon intensity. And it's really these two things. So it's the producers with the lowest cost and the lowest carbon intensity that will be the last men standing. And this region is very well poised kind of to take that role. And then, of course, the opportunities then when you have large feedstock, large reserves that are able to produce with those levels of cost and carbon intensity means that the opportunities, say, around like downstream integration, so moving away from just producing crude, but also taking more of that value chain into refining and into petrochems, which allows you then to have the agility in your product offering to serve the global market, which is certainly going to transition over time. We'll see gasoline go down, naphtha coming up, for example. I think another great opportunity that the region is acting on as well, of course, is kind of the power trading. So being able to dynamically adapt to this kind of physical market. And you've seen the energy trading desk, for example, set up here, serving the Far East, and you've seen the region being able to kind of move in that direction. And then, of course, outside oil and gas, looking into the renewable space, I think there's been really great work done in kind of setting the first stages for solar, for wind, and particularly for hydrogen here. And of course, the announcement from the UAE last week around the hydrogen leadership strategy, using this, what they've done in CCUS and the gas infrastructure to really drive that forward. So I think there's tremendous opportunities both on the oil and gas side and also the renewable side. But then if you look at some of the challenges, of course, I think one of the major challenges for the region here is, of course, hydrocarbon subsidization. Also the fiscal dependencies on hydrocarbons. So even though there are kind of low lifting costs, there is a large kind of societal cost or revenue needed from this. And I think that is a major challenge that I think COP26 is starting to address. And then, of course, challenges around, for example, access to capital for the private sector, wages in the private sector. I think that also is an opportunity then for kind of sovereign wealth funds, which are very powerful in the region here, to maybe diverge some of their cash from investment in real estate, for example, and put it into private sector investment, because you really need that to drive the energy transition forward. So just to summarize, I think there's enormous opportunities as well as big challenges to overcome. So it's a very exciting time.
So thank you, folks. I agree with everything you just said, and you touched on most of the points that I think are relevant around advantages and disadvantages. Maybe to add one advantage and maybe one opportunity, I think that, Arindam, what you mentioned around the net zero commitments is huge. And you look at what Saudi Aramco did leading up to COP26, setting that net zero goal by 2050 it sets the foundation for every oil and gas energy company in the world to follow. So today, as of today, Chevron and Exxon have not made that commitment yet. So there are others that have, BP, Shell, Total, etc., Equinor. Around technology, around business processes, all the tools that are necessary will be brought to bear when these commitments are made. So that's from an opportunity perspective. One of the challenges that I'll just add to this is, and when I think about it from a technology perspective, in the region, there are some restrictions. For example, the sovereign data sovereignty requirements in some countries. Saudi Aramco is a wonderful example of this. So bringing sort of scalable technologies, especially one that interests us at Microsoft around cloud infrastructure, can be challenging. So there is a need in some countries to make these investments. We've done that in the UAE as an example and put data center infrastructure here. But to scale and bring technologies that will help to get to net zero, that's one of the challenges that we see that I wanted to add.
Well, I think you both covered quite a significant amount of the points I was thinking of. I think taking a step back from what the oil and gas companies in this region have endured over the last probably 5 to 7 years is important to try and understand the mindset of where they are. They've had significant losses in multiple downturns. They've got huge social burdens that they need to support and adhere to. And now that they have the threat of their export markets, regulatory frameworks changing, so that the ability to export isn't as guaranteed as it possibly was previously. Particularly just looking at the EU, for instance, and how it's changing its criteria for carbon imports. So there's a lot of difficult decisions to be made for the NOCs, not just Aramco and ADNOC, but some of your smaller sort of enterprises such as Tatweer and Bahrain, more marginal producers. But I suppose on the upside, when you think about the sheer volume of the asset base in this region, the brownfield modifications and the volume of project work that's going to be required to meet these ambitions is enormous. So it's really getting your head around the fact that the oil and gas infrastructure that has been built here over the last 60, 70 years, if not more, has to be redesigned, redeveloped, and repurposed. And that's enormous, absolutely enormous.
Thank you, Bruce, and Uwe, very good points.
It's difficult to do this after like 3 people spoke already, but just to yeah, and you're going to be even worse, Angus. Yeah, but just to build upon some of the things that were said, and I think one of the issues we see in the region is like the comment about last man standing. It's like, how do you ensure you are that? On the one hand, that means decarbonize your current operations, make sure you're at the lowest cost point possible to really, but at the same point in time, ensure your markets, you actually have access to them. And that's questions around, what are you investing in chemicals, petrochemicals? What are you doing in blue hydrogen? And Bruce made the comment about infrastructure is the misunderstanding we see here in quite a number of the regions and in the countries here in the region is that they think that hydrogen is going to be the same as oil and gas. The problem is oil and gas has had an infrastructure in place for decades. Hydrogen has none of that. So if you want to scale that up, you want to be the producer of blue hydrogen, which is needed as a transition, I think the question here is, what are you going to do as Middle Eastern players of investing into that value chain? And ADNOC, I think, is one of the more advanced players. And I'm not saying that because we're in Abu Dhabi, but you see it the way they behave, the investments they make, the products they think about, the services they do. They're more advanced than some of the other ones. And I think it's important because given the market is building up, it really is going to be about capturing market share. And in that sense, the last man standing will be the one that is smartest about doing these things. And I think we will see in this region specifically significant differences between the different NOCs. I will give it to Angus now because otherwise I keep on going.
I think a lot of great things have been covered there, so there's not a huge amount to add. I think from my perspective, really, as a risk, but also an opportunity, building on what Robert said at the end there, is around the aging infrastructure and optimizing what is already there. How do the big players, ADNOC, Aramco, etc., go about doing that? Because a lot of the infrastructure, not just at production, but refining, is very analog, it's very old, and the actual understanding of what is there and how it's working is very limited. So I think there's a big opportunity for using data, creating intelligence from that data and informing decisions about where to invest and where to upgrade the infrastructure that's already there, to reduce the huge capital investment for new projects and really use what is already there and established. I think apart from that, there's some great points covered.
Excellent, great start. I just want to pick up on a point that both Robert and Bart mentioned about the differences in regional NOCs and different countries in the regions. Obviously, we've heard a lot about the UAE, Saudi, and there's been pledges, there's been investments, all of that. But then equally, we've got other economies in the region which are also very dependent. So you've got Qatar, you've got Kuwait, you've got Oman, and maybe even further out into Iraq. And some of their strategies are slightly different. And again, to give you some perspective, in Qatar, the offshore Al Shaheen field is absolutely gigantic, right? It's got 15 billion barrels of proved reserves estimated. But then also the Northeast Field project has some important environmental constituents as part of the development plan. So they're thinking about CCS, they're thinking about how to get the power from renewable sources. So it's the real juxtaposition of all of these different aspects and the challenges that come out of it. But Bart, perhaps we can start off with you because you're based in the region. How do you see some of the differences playing out between these different countries separate to Saudi Aramco and UAE, and anybody else who wants to add as well?
I'm sorry for the background hum. I alluded already a little bit to it. It's like you do see significant differences in the region, the maturity of the different countries. And a lot of that is, and the comment was made earlier about also the sovereign wealth funds. You see the countries that do it very smartly are the ones where you see the oil company and the sovereign wealth fund actually kind of working in tandem. Because one, they get together at like the highest level of government because the ultimate ownership is the same. But the countries where they very actively work together, it works best. And examples of that is you see PIF with the investments in NEOM, PIF also with the investments with SABIC and Aramco. It's like, that's an ecosystem. The same thing you're seeing happening here in Abu Dhabi with ADNOC, Masdar, Mubadala, and a bit of ADQ in the mix. It's an ecosystem. If you then take that to the other end, and you mentioned Kuwait, you're not. The sovereign wealth fund there is focused on foreign investments, is not linked to the oil company, and the interconnection between the different players in Kuwait is very, very limited. And you can see that as a result, the maturity of the decisions and the strategies that are set are very, very different. And the other thing, and I think that's important to note also, is that the understanding of what hydrogen specifically is in this region is very different. It's when you look at it, for example, in Saudi Arabia, they treat it almost like crude oil. Like you sell it and then somebody else's problem. Where in Abu Dhabi, they talk about the full value chain. And I think we need to understand is that it's a very different product and it's far more, not like crude oil, it's a bit more like integrated gas. It's a bit more like, and with even a different customer base, but to really that transition and without only bringing hydrogen up, it is the product, if you think about At the moment, only 40% of energy applications can be electrified. We need to find something for that gap. And hydrogen can potentially be the other 20%.
Right, could I answer?
Yes, of course. It's going to be noisy.
Yeah, I mean, is that a little bit better? I just wanted to add just about Qatar specifically, because I think they're really in a fantastic position, given their position in terms of gas exports. And of course, gas, is going to be the primary transition fuel. Expectation for peak demand for gas is in 2035. So they've got quite a long runway there. But also, if you look at what they're doing with the North Field expansion project, you mentioned carbon capture, but also they're planning to use solar to power some of the drivetrains. And I think also Qatar has proven their ability to cater for the designer hydrocarbon market. So the contract that they won last year with Pavilion Energy, which was the world's first tender for carbon neutral LNG, was awarded to Qatar. So I think they are really positioning themselves very well for this next kind of decade and a half of gas.
Of the NOCs, gas is the primary focus in the region at the moment, because that's how they see being profitable, actually making the transition happen, at least domestically, from a power generation perspective before they move into the other aspects of renewables. So it's a really, really valid point. I'm just conscious of time. Does anybody else want to add anything on this topic? Robert?
One point. I mean, from our perspective, we really see Oman as one of the thought leaders, particularly of green hydrogen development. I mean, if you look, there's already 5 giga projects already been announced that are well into the design phase. And it's not domestically funded. It's not funded through the NOCs. It's through private inward investment. I think the pace and acceleration that they're going at the hydrogen export market is impressive, and I don't see any sort of real competition to them in the region.
No? Okay. I'm going to come back to you, Robert, right away, because I think the next question is very pertinent for you, so I'm going to come back right to so we'll move to the first theme around decarbonization. And one of the things that's coming into play a lot, especially after COP26, we saw Baker Hughes and Shell sign a new memorandum of understanding around how they're going to work together to accelerate the transition. So there's a lot of work being done where the supply chain, the oilfield services community, is actually working in tandem with the E&Ps to help achieve that purpose. Now, that could be co-investing into new models, which actually helps drive decarbonization. But I think the really interesting aspect for us and the audience here would be actually for the supply chain to actually highlight some tangible examples of how you're actually doing that, hopefully with the NOCs in the region, but if not, also with IOCs in the rest of the world. So given it's a much more of a supply chain centric question, certainly Robert, perhaps you can kick off, and then Angus, you can add to it.
It's a good question. I think I have to answer it in two ways, really. I mean, the energy transition here in this region isn't as aggressive as or as progressed as much as we are in the West. That being said, I mean, I think you've got the likes of Masdar, Mubadala, doing some great things in terms of PV development and such like, same with Aqua Power as well. But they've been more of an anomaly rather than the norm. Whereas, my concern is that the supply chain infrastructure isn't in place to meet the accelerated demands of what these projects are going to demand. So the capability and capacity of supply chain, particularly in the electrolyzer market, is incredibly tight. And I would see that being a debilitating factor to push projects probably as far back maybe as 1-2 years, if not maybe longer. In terms of what we're doing, I mean, I suppose our flagship project really is in the UK, is in the Acorn project. So this is a carbon capture project where we're capturing emissions from the Grangemouth site in the UK and using existing oil and gas infrastructure. We're pipeline up to St. Fergus. We're redeveloping the export terminal there, and then ultimately sinking the CO2 into a heavily depleted reservoir. So it's first of its kind project of actually delivering carbon capture as a service to the customer and not related to any sort of oil and gas project. And I think that's the way it's going to happen. So the same way that you have a utility bill for electric or water, what you'll find is industrial emitters will now also be getting a bill for their carbon emissions. And I think that's the way the market's going to change.
Thanks, Robert.
Just take this one. I think so. From ProServe's perspective, we're down in some of the detail and working on some of the more granular issues, and some solutions that we've been working on with the NOCs in the region originally weren't intended so much for decarbonisation and environmental factors. But we have a technology called Smartbox, which is effectively a retrofit to existing well sites, where kind of irrespective of the age of that infrastructure, you retrofit a small device onto it, and it will give you an immediate, through 4G or through various other cybersecure networks that we use, to notify you when there is an H2S leak at a remote location. So where traditionally in this region, a lot of the inspections are very manual, they depending on what the sequencing of inspection sort of rota is, you may only check on a well physically once every month to 3 months. So reducing that lag time when we are seeing unintended leaks and things. That's a very specific example, but just to give one example for you. And then I think, looking at actually how we're trying to work with the NOCs a bit more, we've started to see a will and a want, and we've started to embed some of our engineers actually into some of the NOCs team and genuinely create partnerships. It's in a couple of very specific locations and areas, but when the producers are willing to and open to that idea, taking the expertise which the supply chain does already have and using that expertise to create the solution with them, as opposed to trying to develop it in isolation and then put that demand on the supply chain. That's what we're seeing, and that's a great help for us.
So just to add another example of a project that inspires me, so the Baker Shell one was excellent. That was a really nice MOU. BP and Cemex signed a similar one a couple months ago, where BP will help Cemex decarbonize. And what we're seeing is ironically, the energy industry is getting leverage to help decarbonize the supply chain. It's phenomenal, because we're heavy emitters in the industry. For us, we're actively engaged in Northern Lights. So this is, for those who don't know the project, the idea is to, it was a deal signed between the Norwegian government and a couple oil and gas companies, BP, Shell, Total, and Equinor are part of the project. And basically, Microsoft is the technology partner of this. And the idea is to capture CO2 from the west coast. There's a cement industry in the west coast of Norway, and then ship it offshore and sequester it, and then create carbon credits off that. Our job is to help to build a platform that will be able to really monitor and give a sense of what the CO2 volume is from capture all the way to sequestration. Like, how do you do that? Right? That technology doesn't exist today. So there's a lot of engineering and things like that we'll be doing. But that's a wonderful example of the kind of work that's being done across the supply chain.
Thanks, Sue. Paula, Bart, do you want to add anything more?
Yeah, I think a lot of the interesting things happening around the supply chain as well is around sharing of data. So our core product, Cognite Data Fusion, it enables operators and the supply chain to share, allowing things like real-time optimizations and predictiveness. So we're looking. There's a pump supplier we're working with an oil and gas company on the NCS, and what they're able to do now is share the real-time data from the pumps. So the supplier gets it into their analysis in their headquarters. They're able to use their domain expertise, to your point, Angus, and then they're able to predict when the pumps are going to because if you look around the industry today, there is such sub-optimality around maintenance. So a lot of, and when you think about it, this is the death of 1,000 cuts of the sub-optimization of industry. So things like sending people off in helicopters to change parts that don't need to be changed, such as throwing away spare parts that actually were unnecessarily changed as well. And in terms of like the people required to be offshore at a certain time. So all of this is enabled across the supply chain when you have like the secure data flow and you're able to see kind of what is happening in the context of your equipment. And I think this is very exciting, and this opens up a lot of opportunities for optimization and allowing expertise to be put in the right place at the right time with the right data to make the right decisions. So we're very excited about that trend.
Excellent. Great. Thank you. And we'll come to that a little bit later as well when we start talking about technology and the role of digitalization. But I think you raised some really, really interesting points. I'm going to change tactic a little bit now. I think we've kind of heard a lot about some of the real examples of decarbonization and the stuff that both Paula and Ua referred to. But then when we think about the second theme, which is about diversification of energy sources, if you recall from the initial preamble that I had about the capacity additions in terms of wind and solar in the region, we're looking at collectively 8 gigawatts in the Middle East, right? But then how is the region actually set up to do more? And a few interesting statistics is there's a part around North Field East that Paula mentioned about solar. Total's investment in Iraq includes a solar power plant. I think Saudi Aramco has stated that by 2030, it wants 50% of its energy production to come from renewables. And then as Bart mentioned, the UAE has a strategy to actually become a global leader with a leading market share in the realm of blue hydrogen. So you've got all these different aspects playing out. So I think one of the things that I'm certainly interested to know is that what are the regional hotspots in terms of the energy evolution? Is it just renewables? Is it about storage? Is it about batteries? Is it about hydrogen? What are those hotspots and where do we see them playing out? So open question to the forum.
Shall I start? I think there's two things here. It's like we need to make a distinction between what is for export and what is for local consumption. I think the local market, if we look at the investments right now in renewables, they're not even scratching the surface. Because if you look at the ambition of 2050 in the UAE, one, they need to produce a lot more, but also, and there was, Paula alluded already a little bit to it, like the social contract in the region. It means things like fuel subsidies need to go. Energy efficiency needs to be installed, and that's in everything from construction to transportation to you name it, it doesn't exist. This is one of the, and Qatar is like the far outlier in that. If you look at the energy consumption per capita, this region is on its own level. Like, and not surprising, it's nice weather now, but most of the year it's pretty warm here. And that's the challenge that we have, is that one, we need to step it up a lot more, but we also need to make sure that people start consuming a lot more efficiently. Similarly, if we look at the export, and there it's, of course, there's the discussion around chemicals, petrochemicals, those investments, but it's also around the export of, for example, blue hydrogen. Let's be very clear that if we, for all the demand that is forecasted, all the projects in the world in the space of hydrogen are not enough. We're just scratching the surface. So, and that's even with all the ambitious statements, and I think that Oman is right, as Robert says, a bit more advanced, but across the region, I don't believe that we're doing the investments yet at the scale that we need to do. And you saw that disconnect at a global level, like where the drop in oil investments, particularly by the IOCs, was far more than the uptake in renewables. You see a disconnect, and you see all the issues with supply as well as the price right now. Now, similarly, we need to make sure that that is not in the future not going to happen again. So investments here in renewables, if the region really wants to play, they also really have to step up.
So Bart, then is there a hotspot in your mind, though, that could there be something that could be a hotspot in the region? Hydrogen, solar, wind?
solar is fantastic here because of it is easy supply. The raw materials are there. Similarly with hydrogen, blue, and if you take Qatar as an example, but also green eventually. But it needs investments. And I find there is still a bit of a disconnect between the rhetoric and the marketing on one side and the actual investments that are happening.
Fair point. Totally accepted.
I agree with you. I think PV solar is massively underplayed here. There's so much more opportunity to use PV solar as part of the electrification progress. So much opportunity to use PV to displace, diesel power consumption. I mean, if you look around the city, I mean, no one's engaged with rooftop solar, something very simple that could be easily rolled out. So the utilities here, whilst they're making great progress, can step up that little bit further. But then when you come back into an asset level, I think it's down to the individual decision maker whether or not they're actually going to roll out renewables as aggressive as it really can be. It really can be.
So I think from what we hear from both Robert and Bart is that, yes, there is a disconnect there between the ambitions and what we're seeing actually being played out in real life in terms of investments. But it's not actually that dissimilar in my mind, my humble opinion, if we went back 10 years ago to Western Europe, for instance, where there was a lot of talk around offshore wind. The industry, you could argue, was somewhat nascent, and there were a lot of challenges with the industry there. But over the period of time, Western Europe has actually emerged as a leader in offshore wind. And that's not just in terms of the volume of installations, but it's also from a technology perspective. It's the size of the turbines that are increasing. It's the distance from the shore that we're going further away. So over time, that has happened. And I think one of the interesting aspects to me, one of the really encouraging things, is that we are starting to see this statements from the region which are actually quite positive, and I think that's good. So when you look at all of that, do we think that the region has the potential to be a leader? Is it PV solar? Is it storage? Is it hydrogen? Is there actually a potential for this region to be a leader? And I think it'd be really useful to hear your insights as to how, in the perfect world, let's say the investments were to happen, the missions were actually going and progressing, do we see the region becoming a leader? Maybe Ua, if you want to start off.
I'll pass this one to anyone who wants to take it.
Definitely. I see this region being a market leader in hydrogen development, particularly green and blue. I think if you take your example there, where in Northern Europe we built upon the skills of the offshore oil and gas industry to diversify into offshore wind, and now I think ultimately we will come to floating wind as well. And there's a natural progress there. Similarly, I take the same approach here. Is that for ultimately large gas export delivery, this region is first class at it. It does it incredibly well. So green and blue hydrogen seems just like a logical, natural transition to give the region yet another product to sell to the market.
Yeah, I firmly agree, but I also don't see any reason why the region couldn't be leaders in solar and wind. And I think especially very uniquely positioned for solar, but also really good areas around the region also for wind. So there's nothing stopping it. I think it's probably more around things like promoting the investment, promoting the private sector, removing the subsidies for hydrocarbons as well. That will really allow that to grow. But technically and fundamentally, no reason why the Middle East couldn't be leaders in all of these three areas. Plus, as well, being leaders in low cost, low carbon oil and gas.
Yeah, and I would just add to that. I think as an oil oil-rich nation, and one that will be supplying oil to the rest of the world and less oil-rich nations, I think there'll be demand on those types of countries and exporters to be providing their oil and gas offset to a certain extent. The societies in countries which are importing a lot will be driving a requirement for the oil that's being imported to have technologies back home at production that is offsetting the impact of that. So carbon storage, carbon capture as well. I think this country has a big opportunity to expand its current capacity in.
I just want to add one small thing to that. You made the example with Northwestern Europe. My home country, the Netherlands, was one of the countries driving a lot of that. But the one key thing that happened at that point in time was significant investment by the private sector and a market that was liberalized. It was basically opened up, an energy market. Let's be very clear, we're not there. This is a very centrally controlled energy market. And I think one of the challenges we'll have is, are we actually allowing private sector parties to play in a market? Are we not going to have, like in Dubai, only one utility company, but we're going to have several? It's because a liberalized market and the free market will actually be needed for people to be attracted. And I think Robert made the example of Oman, where private sector is actually used to invest in hydrogen. And I think similarly should happen here.
That's a really important point, Bart. And the only point I'd make with that is the private sector, and I think someone mentioned about access to capital. So capital access and the risk profile for the private sector, especially with some of the newer technologies or nascent technologies such as hydrogen, for instance, they won't have the same amount of risk appetite. But equally, I guess you could argue, and you probably won't agree with that, in the region, because you have the public utilities and the policymakers here, they might have a slightly different take on that, and they might be willing to make more investments and take some of that risk. So I think it really depends, how things play out. But I think most of us agree that in the ideal world, if all of these things were to play out and you had the risk appetite and the private sector came into play, there's nothing actually stopping the region from being a leader in the energy evolution. It doesn't necessarily have to follow everyone else, but it could set up its own path. So I think with that, I'd probably want to go to the last theme of the discussion, which is around technology and digital transformation. And it's hard to have a real conversation on the evolution without discussing the role of technology and innovation. I think we've had some really good examples laid out by Ua and Paula. I think, Ua, to your point, there is also the OpenAI initiative that Microsoft's a part of. And then I think Deloitte authored a paper with GESI around a smarter 2030. So how do different stakeholders come together and actually meet their sustainable development goals? Digital transformation is one of the biggest strategic pillars from a technology and innovation perspective. And I think what we wanted to chat here about is how is that actually playing out in practice? And I think there's two aspects to that question. The first is probably from our panelists who are in the technology side, so Paula, Ua, and also Bart, to kind of lay out that landscape. But then the second aspect of it is really around how is that actually being embraced by the industry? So Petrofac, Robert, and Angus from yourself and ProServe, how are you actually approaching digital transformation? Is that a client-led approach, or is it an organic approach that you're embracing yourself? So I think we'd like to explore those two angles, but let's start off perhaps with the technology lens first. So perhaps Paula, Ua, and Bart, you can start off the discussion.
My pleasure. And first of all, I just have to say digital transformation, it maybe is like one of the fluffiest terms in the industry. So it's I see a lot of eye rolling when we talk about digital transformation, which I completely empathize. What we're focused on in Cognite is very much around the data. And what I think that most people who aren't involved in the industry don't understand is actually how suboptimal decision making is in the industry. I mean, it's basically, like today, if if I want to find a restaurant to go to, if I want to know like when it's open, what the menu looks like, is it good, where it is, the number, I just take out my phone and I go to Google Maps. If I want to do the equivalent in industry, it's basically like going back to 20 years ago when I'm looking for the golden pages. I'm looking it up, finding the number. The phone is somewhere fixed to the wall in the house. How long is it going to take me to get there? I've no idea because that information is not available. Is it good? No idea. Try to find a newspaper maybe with a review. Like literally that's industry today. And we talk about the use of AI and we talk about digital and we talk about all those optimizations. But if you are in a world that is like that world I described 20 years ago, that's just impossible. Like you can never do it efficiently. And that's really what we're solving with our technology. It's about fixing or removing all of these complexities with legacy systems, with fractured systems, with silos in data systems and in domains and value pools across the industry, and pulling that together so that you're able to kind of quickly make decisions, you're able to quickly do AI and scale it out, or even just kind of simple transparency. So like reporting of emissions, for example, the data gathering for that is back to the golden pages. It's really, really poor. There's nothing really done in real time with that. And if you think about like how hard it is to just gather the data, how good do you think the industry is on optimizing for emissions? So it's really not good at all. So we need to move, and with technology we can do that. We can move from the world of 20 years ago into the world where we're able to actually optimize for emissions based on the real-time performance of the plants, and we're able to actually predict into the future as well instead of just kind of spending time looking at the past. And I'm really passionate about this. And like I said, we're working with like Saudi Aramco, BP, and Total Energies and others who have spent a lot of time trying to get there, a lot of digital budgets as well trying to get there, and then they have the realization that fixing their data foundation is the first major step to do it.
Thank you. I'll offer. So I agree with everything Paula has said, and we have a very similar view with Cognite. I'll offer a framing for how we see digital transformation. So for us, you know, if you ever hear Satya talk about digital transformation, he'll say, you know, it's the value created by aggregating the various parts of your operations, people-centric data, your products, if you make products, etc., bringing them into one place to create data, so to create value. So the data, as Paula says, and then, but what we try to do is to root ourselves in the industry, because in the end, what matters is the outcome, and there are kind of 4 boxes that we think about. So the first is sort of operational excellence related use cases. Once you have that data estate, how do you improve supply chain, predictive maintenance, AI-driven use cases, all those things. The second bucket is people-centric use cases. How do you improve skills? How do you help the field worker of the future be more productive? How do you drive collaboration, things like that, second box. Third box is what we call transition to clean. So these are all the building blocks to get to net zero. So one, you got to measure your emissions. You need to be able to abate those emissions. You need to be able to generate renewable energy. So a lot of the renewable energy conversations we just had, what are the use cases that enhance that? And then finally, the smart grid. You need to be able to deliver that energy in alignment with the conventional energy that's being created in parallel. And that's not easy at all. You need a smart grid that can help to look at demand and look at peak loads and various other factors. The fourth box is what we call reimagine energy, and that's the use of those building blocks in transition to clean in industry. So EV use cases, smart buildings. Anybody who runs or has run a refinery or done work with refineries, it's a smart building, right? And if you bring digital transformation tools into it. The other thing in the reimagine energy box is, and I mentioned it earlier, we're seeing it's sort of a catch-all in there to help energy companies that want to go and help other industries decarbonize. So again, you got to be able to measure emissions all the way down to delivering renewable energy and et cetera into the smart grid. And we're actually seeing energy companies that show up and say, we want to deliver that service to industry, help us. So in essence, around digital transformation, those are the 4 boxes. So that's a framing you can take back to your organizations, and you'll find those similar themes in there as well.
Perhaps to add to what you were saying, it's like and one of the things in my presentation I talked about the hydrocarbon stalwarts, the guys that have to invest heavily to basically decarbonize their current value chain, that really have to reduce costs. And to be honest, a lot of the decarbonization efforts, they're part of operational efficiency. It's just another metric that you're adding next to cost. It's not a new thing. It's looking at exactly the same process. The only thing is, and Bill, I want to say what Uwe was talking about use cases. So one of the things that we see a lot is, yes, there's a lot of use cases, but there's no integrated strategy. So all of these parts, and I think that's where a huge opportunity for the sector lies. How do we connect all of this together? Because you see all the different parts, you see all the use cases, but I think that when we look at what is actually needed from an industry perspective, we still have a long way to go. And the challenge, and I think that's for service providers, technology providers, advisors, the industry, for everybody actually to collaborate and to come together in how can we really make a substantial reduction. And I think that's where we need to go beyond the use cases. That are individually all make their business case, but the sum of the parts is not enough.
Yeah, so I think from an application perspective, a big thing about digital transformation is I think the trust of the operators. Do the operators and do the people in control of their assets, etc., do they trust that data? And there's, I think, 2 stages to it. There's one great part of the digital transformation which initially is just helping us to see what is already there, and for humans to make that experienced judgment call on taking a decision. So we've got an asset management kind of platform where we can now pull together legacy information and make more informed decisions along with the operators about what maintenance needs to be done. I think the big step will be when that decision is far more reliant on artificial intelligence and automated, and there's that trust, that inherent trust developed in the operators, really, to do that. There's Henry Ford said, if I asked my customers what they needed, they would have asked for a faster horse. And I think at the moment, a lot of them are just wanting a faster horse, whereas the step change for me is going to be when there's ones that are bold enough to say, okay, let's give this a go and let's really rely on trust on that data, that artificial intelligence to run some of our operations.
I'd really like to add to that, because we do hear a lot about this trust in the data, but data is basically that's the heart of the industrial control system, right? So these plants are being run based on data from the plant today, and decisions are being taken based on what people are seeing in front of them, whether it's true or false, whether the P&IDs are up to date or not. So I think it's really interesting when people talk about, we don't want to trust the data to make decisions, but it's like, well, how do you think you're deciding things today, right? And I think also kind of to the point of what does it take to move away from a singular use case to actually something substantial that you can get ROI on. And this is kind of really what we're solving with the technology, is so that you deliver a single use case, say in 4 weeks, and then you scale it out from 1 well to 10,000 wells, from 1 compressor to 5,000 compressor, from 1 rig to 30 rigs in kind of a matter of 4 weeks after that as well. Because what happens when you get into this perpetual cycle of proof of concepts and singular use cases is that you're just drops in the ocean. And if you cannot scale, you can't do anything. And then just to the point of AI as well, I am really concerned that we are going to create we're going to create the industrial winter of AI. When we try to throw black boxes kind of into industry, and we're saying this neural network now is going to decide the plant's operations, that is literally a step too far. There's so much we can do now by putting the right data in the right hands at the right time, and having kind of maybe a very narrow band of AI, which is basically machine learning, connecting that also with physics simulators, so combining the best of both worlds there, and sticking to this kind of like mathematical statistics, right? So it's not like a crazy black box, but it's something more suitable to industry. And these are the steps that we will take to get to something that is really AI driven. But it's one step at a time. But there's so much that we can do just by putting data in the right hands today.
Just following on, I agree wholeheartedly. We're very much a data-driven society now, and from an operations and maintenance perspective, it's all about having the right quality of data to make those informed decisions. We've developed our own sort of in-house technology where we run the operations and maintenance on offshore platforms in the UK North Sea. That provides us the intelligence to know how the asset is actually performing, and give us that predictive maintenance opportunity to understand when a trip is likely to happen before it does. And being able to mobilize the right level of people, the right level of skill sets, the right work packs through the right central system allows that efficiency and one center of truth, which is equally important. So, yeah, wholeheartedly agree.
Thanks, Robert. I think we've done remarkably well, given that we started really late and we covered a lot of bandwidth in literally 5 minutes ahead of time. So I did have a few more questions, but I think in the interest of time, what I'll do is actually I'll open up the floor to audience questions, and I won't give you mics because I don't think that's great. But if you have any questions, please feel free to ask. Why don't we give maybe 10 minutes for audience questions, if there are any? So the question is, Reliance has exited the shale business in the US. So this is Reliance Industries from India. And the gentleman's question is, where does the panel see the direction of travel for the shale industry in the context of the energy evolution?
Do you want that one?
Yeah, I will start and perhaps then add it to it. But one of the things to think about is where does shale sit in the cost curve? And shale is still a lot cheaper than a lot of other sources around the world. So that's also why we got the earlier oil price crisis, because they were able to fill that gap. The difference, though, I think with the past is that they don't have that access to capital anymore, where in the previous crisis, they were basically Wall Street's darling. They're not anymore. There's a lot of money that has value that has been destroyed. And what we're seeing is that I don't think that they will fill that gap as much as they used to, but there's still very much room for them. It's as if there's room for anybody at the current price point to deliver oil.
I totally agree. And what we've seen is they are leveraging technology much more aggressively. They learned a lot during the pandemic, right? Because a lot of them were in a lot of pain. And we've also seen a lot of them also make net zero commitments or get closer to doing that. And so I think there will be room. I think they'll evolve, and I think they'll accelerate the use of technology. And some of them will, because if you look in the energy transition, we will continue to need a baseline of oil, and so they will fight to be competitive and be part of the oil piece of that energy transition profile.
I think when you look at shale, particularly for North America, I mean, it's like one of you said, is going to be one of the last men standing. I think weaning the Americans off of their oil dependency is going to be an enormous challenge. In terms of the net zero ambition and what the US has actually signed up to, I think how they treat their shale oil industry will really dictate on how realistic they are in meeting those ambitions.
I think the final thing I'd add, one of the things we're starting to see in the shale is where do they focus their attention in terms of the evolution? So the area where a lot of attention is going now is around carbon capture and storage. So if you think about companies like Occidental, Ox is basically a company that's going to evolve into a carbon management company. So they will, the the lens from the US shale is very different to the lens from an IOC. So the IOC is about transitioning into a broader energy company. US shale will still be an oil and gas focused company, very much at the heart of being profitable. So that's one change. They need to be profitable. But equally, with the ESG considerations that you have coming up from institutional investors these days, and that's not to be taken lightly, by the way, I think there is a real need to focus on things that they can do really well. So carbon capture and storage certainly is one that they're going to do really well. The other evidence that we've seen is that the drilling in sort of, let's say, the Haynesville and the Marcellus parts, which are the gas-rich basins, haven't actually stopped that much, right, compared to oil. So there's a real more focus on actually using gas as well as the transition fuel. But I totally agree with Bart that the capital that's available these days is not the same. They're not the darling anymore of Wall Street, and they really need to focus on profitability.
But I think this really brings one of the key points to the transition is that it's really hard to predict. So there's so many factors at play. So it's not just about for sure not about technology, but there's lots like geopolitics like playing a massive role, consumer sentiment, investor sentiment, regulatory issues, like the green taxonomy from the EU. So there's a lot going on. So I think one thing that we know, the only things that we know for sure is that the rate of acceleration is always accelerating, and that there is absolute unpredictability in terms of what's going to happen.
Absolutely. Any other questions from, yes, the gentleman at the end?
Hi there, yeah. Thanks everybody for a great talk. I want to touch on some technology and the regulatory framework. So we touched on the fact that, like in the EU, there's the emissions trading scheme happening at the moment, and perhaps for Ua and Paula, but what technologies are being deployed now which really focuses on emissions reduction and how that's been managed and verified for operators?
So I think, first of all, there aren't many good examples out there, right? You have a complex industry issue. There are emissions management systems that look different. In some cases, there might not be a means to visualize the data. Truly, emissions and CO2 and management of all of that is a huge data issue. And that's what makes it very, very exciting. So we launched Microsoft Cloud for Sustainability a couple weeks ago. It's a big announcement that we made with the idea to help organizations aggregate their emissions. However, whether it's scope 1, 2, or 3, but you still need extensions. So you can't deploy it in an LNG plant, but you'll need a Cognite solution, for example, that can help to pull that data and ingest it into the Microsoft Cloud for Sustainability. So that's our sort of flagship to address this problem, but it's complex. There isn't a good example. I just want to touch on the regulatory piece. What will happen eventually, and we're seeing this, energy operators are showing up to us and saying, we need to figure this out, and we need to get, of course, because of net zero goals and different things and the right reasons, but also they see the regulators doing the same thing. So the regulators are now also saying, hey, we want to be able to regulate and manage these policies that we're putting out there, Fit for 55, for example, or the green premium concepts that the EU has been talking about. How do you monitor and manage all of that and enforce it? You're going to use technology. And imagine being able to do that very efficiently. The energy operators have to align. So you need regulatory means, and then you need finance. Those are the three things to be able to execute a very good sort of ESG strategy.
I can add just to some of the examples that we're working with. So on the NCS, the Norwegian Continental Shelf, emissions is very much down to the use of diesel generators. So we're working with a number of operators on the NCS to do generator and turbine optimization. So basically they typically run them both in parallel, and they're trying to do things like gas lift. They're trying to optimize across the whole field. They're trying to understand what's happening at the reservoir, the well, what's happening on the processing side. And that optimization is really difficult to do as a person, because you can't get into all the different systems and it's a lot of data. So this is where we're using our platform to do that. So we're reducing the kind of parallel usage of the generators and the turbines, I think, from approximately 60% down to kind of less than 10%, which has a huge impact on emissions. And for some of the companies that we're working with, the emission or the CO2 taxes can make up 25% of their OPEX. So it's a very, to your point, Bart, it's a very significant impact on emissions, but also on OPEX. Another thing we're doing is working with kind of manufacturers who are kind of on the leading edge of this understanding that if they can produce lower carbon products, they can get higher margins for them. So being able to trace the carbon footprint of individual products. So we're working with manufacturers of physical equipment that are supplying into oil and gas, but also manufacturers of chemicals as well. And I think that this is really interesting, and of course allows the E&P operators then to look at, like, obviously their scope 1 or scope 3 rather, emissions. So I think there's tons of work there all around, like energy optimization, energy management, emissions optimization, not just the turbines, but also oil and water. We're working with utility companies on SF6 emissions reduction as well. So there's tons that we're doing there and tons to be done there as well. And it's once you have the data in place, monitoring and then optimizing based on different criteria is quite easy.
Great examples. I hope that helps give you some perspective. There's a question from the gentleman at the very end.
My question is around data, right? There's a key theme around it. Data is important to predictive maintenance, to carbon capture, to measuring work performance and all of that. But because to take a step back, data is a security imperative in this part of the world. How do you get to that point? So I'll be interested to know what Hangers thinks about how do you take a company from having the NOC trust you with their data in the first place before you can use that data to help them optimize their works, right? So that's the first question. The second question is around, Bart mentioned something around the life cycle of different ecosystems, right? In Europe, for instance, the embrace of carbon capture and reducing carbon emission is a lot bigger than probably some part of Africa. Do you see investment in carbon-driven, like in oil and gas, shifting to places where the ecosystem is not at that point yet, where they're saying, oh no, reduce emissions and all of that? Is that going to affect in the next decade how investment is going to shift? Or do you think that gap is going to shift?
Shall I answer question 2 first before you take question 1? Because I was just holding the microphone. I was actually 2 weeks ago, or like a week ago, it was Africa Oil Week. I happened to actually be in Dubai. And we had a number of meetings there with like different ministers of African countries. And one key thing to understand in Africa, and large parts of it, it is not about energy transition, it's about energy access. There are countries there where less than 20% of the population has access to energy. So the whole debate around what are they going to do, it's the advantage there is because so few people have access, you can actually skip a step. Because historically, the whole Western world, we've gone from wood to coal, from coal to gas, oil, and we work our way up. And eventually we went up in carbon and now we're going down in carbon. You don't have to do the same thing. So if you don't have power plants, if you don't have something, why do you not think about, instead of like decentralized, instead of diesel generators, use solar? Instead of building a gas-fired power plant, build a solar one. It's like you have opportunities to actually, I don't want to call it necessarily leapfrogging, but to skip a step in your development. You don't have to make the mistakes that the Western countries went through. And I think the challenge will be is for all of these countries is particularly the ones that have access to natural resources. Like if you take Malawi, for example, that has tremendous coal resources, are they going to skip that step? Because that becomes very much a political decision if you do it or not. But they actually have a fantastic opportunity to think about that life cycle and actually just hop over a few steps along the way. And then there was a data question on the first one.
May I comment on number 2, actually, before we shift to 1? Totally agree with everything Bart has said. There is an opportunity to skip. So countries that haven't been heavy emitters, like in the West, to skip the steps. What we have seen, though, is countries like India and China that are saying, hey, we haven't had a chance to emit like you in the West, and so we would love the opportunity to reserve options like coal, so we at least prolong the use. So we saw this, well, the U.S. climate change conference, COP26, when the deal was struck, a last-minute change was proposed and accepted by India. And a very slight word change for those who followed it, right? So changing the wording from reducing coal or removing coal, I think was the exact word that was, and it was changed to ramp down. In a very subtle change, but the idea is, hey, we'd love the opportunity. We, countries like India, countries like China, countries in Africa would like to reserve the opportunity to continue to use these other sources of energy. So that's the other side of the coin.
I can just speak a little bit to the data problem. So what we're seeing is that there's obviously, like, we know industrial operators, they have tons of data. They're basically drowning in data. They struggle to put it in context. So one of the large IOCs that we worked with, they had, say, 60% of their sensor data could be mapped to actual equipment. Like, this is a very typical situation in the industry. So with the software that we built, we're using machine learning, rules-based, so that we can have the SMEs kind of in with the software so that we're able to do that matching as automated as possible. And we can get up to, like, from 60% up to 98, 99% matching kind of with the software under the supervision of the SMEs so that they're trusting this matching. And then the second thing is, of course, that to be able to put the quality monitoring on the data as well. So, for example, I'm using this particular group of sensors for predictive maintenance. I need them to have a freshness of, say, 5 minutes. So if that isn't happening, there's a flag, and I can see that the quality of the model is going down. So it's a lot about transparency of the data, and it's a lot about using software to automate quality monitoring and matching and relationship building.
Yeah, just briefly to add, because I was going to come to Paula on that question. I think context, given the context of what that data is providing, like you say, to the operators to build trust, and also from a on the ground kind of perspective, ensuring that the relationships are there at the different levels. So you've actually got buy-in from the senior positions, because the challenge we've faced, a heavy challenge we've faced in the past, is where we've been wanting to access and provide data and information. There's been a resistance to provide that from the operator. So it's not without its challenges, definitely, but it's, I think, just a process of building trust. And to one of your points earlier, not trying to eat the horse all in one go, but take that bit where you can really add value, start down there, prove the concept, give them the context of how it can help their operations ultimately, and then scale up quickly from there.
Can I add to that one? Just one more. Thank you. So 2 comments on this. I think that we've also seen, to address this issue of data sharing and just removing the barriers, so open subsurface data universe, right? OSDU, it's an open group forum that drives data operability across different subsurface workloads. So the Schlumberger, Delphi, Halliburton, Landmark, D365, on and on and on, Emerson, etc. Sorry if there are any solutions on the panel that I haven't mentioned, but it's like it's crazy because it offers a wonderful foundation to collaborate around subsurface workloads. So that's just one area, but it's this is like 80% of the industry. So, and it's one of the most powerful data-driven initiatives that I've seen. But then the other side is what I mentioned earlier around data sovereignty, and I think that's part of the point you mentioned is, like in Saudi Arabia, this is a huge barrier and opportunity, because in the end, you need to have a sovereign cloud of some sorts in the region. And these are conversations that every cloud provider is having in the region with the kingdom. But it's not easy. This is a huge investment, and it's something that every company has to think about. But then it creates the opportunity to think about hybrid solutions. So we have Azure Stack, and this is an on-prem sort of instance of Azure, and you can do sort of initiatives where you run analytics at the edge, and there are many solutions like that. But then you start having to think creatively. If I've got zero trust to move data outside of my sort of sovereign boundaries, then I need to sort of use these other technologies that exist. So just offering sort of two very extreme examples of the question you raised.
Thank you. In the interest of time, I'm sure everyone's got other things to get to, so if that's okay, we're going to draw it to a close. But before we do that, I'd like to thank all the sponsors of the event. And if I could kindly ask the audience to join me in a round of applause for our brilliant panelists. Thanks, everyone. Thank you for your time, and enjoy the rest of your day, and stay here in Abu Dhabi.